Welcome to the Mental Health Market Update, where we talk about what's happening in the mental health industry. Here's your host, Stephen Hayes.
Welcome back to the Stigma Podcast and today's Mental Health Market Update. Happy Friday. Happy Juneteenth. And since I'm the only one who gets to talk on here, I'll just tell myself happy 40th birthday. I wouldn't want to spend it anywhere else other than in my closet talking to you guys about mental health. In recent weeks, we have focused on the public companies whose performance, earnings, operational statistics, and management commentary can give us insights into what's going on structurally within the behavioral healthcare market. We've covered Cadasys and Acadia, and now we're going to dig into Universal Health Services, ticker UHS. A little bit more about the company. Universal Health Services owns and operates acute care hospitals and outpatient facilities, as well as behavioral healthcare facilities. They're the largest inpatient psychiatric hospital provider in the United States and also a large regional acute medical hospital operator with leading share in places like Las Vegas and parts of Texas. At the end of fiscal year 2019, the company operated 354 independent inpatient facilities, 42 outpatient and other facilities located in 37 states, Washington, D.C., the United Kingdom, and Puerto Rico. Back in 2010, UHS acquired Psychiatric Solutions, PSI, which positioned UHS as the leading behavioral health provider in the United States. The price was around $3.1 billion and doubled the UHS behavioral business overnight. PSI had 94 inpatient facilities in 32 states at the time of the acquisition. In the year prior to the acquisition, 2009, PSI did about $1.8 billion in revenue and had about $330 million of EBITDA. The acquisition price results in an approximate multiple of 1.7x trailing revenue and 9.4x trailing EBITDA, roughly. That's a healthy EBITDA multiple. It's another data point in our effort to map the value of businesses we are building in the behavioral health space as we look for hopeful exits one day. Universal Health Services reports its business in two segments. Number one, acute care, and number two, behavioral. So let's dig into those segments real quick. The acute care segment operates 26 inpatient acute care hospitals, 14 freestanding emergency departments, 6 outpatient surgery and cancer centers, and 1 surgical hospital with a total of 6,379 beds. In 2019, the acute care segment accounted for 54% of the company's consolidated net revenues. Since we're a behavioral healthcare focused group here, we aren't going to spend as much time on the acute care segment, but in Q1 of this year, acute net revenue was $1.521 billion with EBITDA of $197 million, resulting in an EBITDA margin of 12.9%. which will become important here in just a few moments. On the behavioral side of the business, UHS operates in 3 behavioral health service lines: inpatient psychiatric facilities, residential treatment centers, and addiction treatment facilities. The inpatient psychiatric facilities work to stabilize patients, offering 24-hour observation and monitoring by psychiatrists. The residential treatment centers provide treatment for a variety of behavioral disorders in a less intensive residential setting, generally for the at-risk youth population, over an extended period, and addiction treatment centers provide addiction counseling, often in a residential setting. At the end of 2019, the company had 328 inpatient behavioral facilities and 21 outpatient facilities. 56% of the inpatient facilities and 90% of the outpatient facilities are located in the United States, while about 43% of the inpatient facilities are located in the United Kingdom, along with 10% of the outpatient facilities. The remaining 3 inpatient facilities are located in Puerto Rico. Total beds in the behavioral segment totaled 23,812 at the end of fiscal year 2019, and this segment accounted for 46% of the company's consolidated net revenues in 2019. In Q1, the behavioral segment reported net revenues of $1.306 billion with pre-corporate overhead EBITDA of $288 million for an EBITDA margin of 22%. This is far better than the acute margin of 12.9%. Let's dig into recent performance a little bit. In Q1, the company reported total net revenue of $2.83 billion versus pre-COVID consensus estimates of $2.961 billion, a miss of about 4%. And EBITDA was $361 million versus consensus of about $480 million, which is a pretty big miss of about 24% versus consensus. The company's CFO recently spoke at the UBS Global Healthcare Conference in May, on May 18th to be specific. He talked extensively about how UHS is navigating COVID-19 and how it has impacted the acute care business specifically, as well as the behavioral business and the differences between those impacts. I feel like there's a lot we can learn about the behavioral healthcare market, its resilience, and future operating conditions in various environments post-COVID from some of his commentary. The CFO explained that the middle weeks of April were likely their low-volume weeks and has seen an improvement since then in the early part of May. This is similar to what we heard Acadia say around the same time at the same healthcare conference. As of mid-May, the company mentioned that elective procedures are down between 50% and 55%, which was as bad as 70 to 75% down in mid-April, while emergency room volumes have recovered to be around down 35% versus down 50 to 55% during the worst part of April. Behavioral performance has held in a lot better, as expected, with patient volumes down 10% in May after being down around 15% during the worst weeks of April. The CFO said during the conversation that lower ER volumes are largely to blame for the reduction in lower acute psychiatric volumes. The CFO also said that patient reluctance is the biggest driver of the reduced ER volumes, but that those services will eventually be needed one way or the other, and that some of that demand is not lost, but rather pushed to the right. We'll see. Focusing a little bit more on the CFO's mid-May comments around the behavioral business, I noticed that he talked a lot more positively about the behavioral segment. He commented that the behavioral segment has performed well in past recessions because demand for these services is not as discretionary or economically sensitive as acute care hospital services to some degree. Said differently, a lot of these patients aren't making the decision to go get care for themselves. One big challenge that the CFO talked about, and others have been discussing, is the shift in payer mix due to COVID. There's been a shift away from commercial toward Medicaid and uninsured during this time. While a lot of the analysts are looking to prior recessions to see exactly how this will impact revenue and earnings, the big difference this time is the existence of a huge Medicaid expansion compared to prior recessions. So again, we will see what the data tells us as time passes. Let's talk about valuation of the company. Over the last 5 years, UHS has averaged a forward enterprise value to next 12-month EBITDA multiple of around 8.7x. As of today, that number is 8.5x, which is right in line with the historical average. It is worth noting that this multiple dropped to 5.5x EBITDA back on March 18th during the bottom of the COVID panic. On a revenue multiple basis, which is what a lot of our startups care about, the company has averaged about 1.5x NTM revenue over the last 5 years and is currently trading at 1.1x revenue. It's really hard to look at the revenue multiple for a business like this because it's a mature business that has a lot of real estate, a lot of CapEx, and a very different capital structure than a startup, but a lot of people will ask about the revenue multiple, so I wanted to point it out. So what does this tell you if you're a startup founder in the mental health space, or if you're someone like me that's investing in startups in the mental health space? Number one, it confirms that we had hoped and thought we knew, which is that the behavioral space is holding in quite nicely during the economic pullback for the reasons mentioned earlier, as we normally see in economic uncertainty. Number two, we have another data point on valuation, both looking at current trading levels and the trends over time in those levels. And of course, the PSI acquisition numbers at around 9.4x LTM EBITDA. Number three, the CFO also talked about the pent-up behavioral demand from the crisis period, which we should start to see in the coming months as the top referral sources for behavioral patient days come back online, schools, emergency rooms, etc. We are hearing this a lot, and we will certainly know if this is real in the coming months. There are some really interesting questions that I want to know the answers to around how much demand there really is after COVID, why, how much of it will be virtual, telehealth versus in-person, and how will that trend and toward what steady state or new normal and by when? I know I'm asking a lot here, but the data points that point to trends here will be very important to figuring out how the behavioral health space prices assets, how it experiences growth, and how strategic partnerships get formed and priced across the space in the next year. Number four, this is yet another public company with a mix of behavioral and non-behavioral healthcare services where we see significantly better margins in the behavioral segment. Check out last week's Acadia Healthcare episode on the market update to hear another example of this. So, wrapping things up, I really hope you'll take time today to honor Juneteenth. Also, celebrate Father's Day with your family this weekend if you have the luxury to do so. To our listeners, thank you for being here. Please, if you like the content, hook us up with a subscribe or a like or a review on your favorite podcast platform and share us with a friend. We also have a Patreon account where our loyal supporters can support our content creation, which will be linked in the show notes. Most importantly, we want to hear from you. Please do comment on social media and let us know what you liked or what you want to hear more of. You can always reach out to us on Twitter at StigmaCast, on Instagram at StigmaPodcast. You can email us info@stigmapodcast.com, and you can find us online at stigmapodcast.com. Thank you again for being here. That's it. Until next time, stay safe, be well, and thank you for your support.